It's Friday the 10th, I'm FX Plur and this is CurrencyTransfer.com's market update. And the headlines today are that the dollar moves higher against the euro, sterling is struggling and protectionism resurfaces as trade concerns grow. So President Trump has been at it again. He's long maintained that America's trading partners have taken advantage of trade agreements to allow their currencies to weaken. Few nations, particularly in times of recovery, would actually risk the inflationary effect of a weaker currency despite the benefits that this would have to their trade balance. So in reality, he needs to look a little closer to home. Apple, for example, is a great example of the problem. Equity markets saw Apple's market cap reach $1 trillion yesterday. $1 trillion, quite extraordinary. But they barely make anything in the US, and the offshoring of the iPhone production and the like has contributed to the US industrial and manufacturing decline. So as concerns of protectionism resurfaced, the dollar index broke the 95.25 resistance again. It closed at a high of 95.60 yesterday. Markets seldom see central banks doing the work of one another, but the Fed's interest rate policy at the moment is strengthening the dollar. This in turn is giving enormous help to the ECB by further weakening the euro. And despite every effort to slow the pace of imports, the dollar strength has added to the EU trade surplus. It's anyone's guess how the trade war will pan out and indeed how far or whether the EU will get dragged into it. But for the time being, the ECB is certainly welcoming a weaker euro as it helps export-driven growth across the trading bloc. Euro dollar moved down to 114.60 yesterday. Sterling euro moved up to 111.30, having made a fresh low for 2018 of 110.75 earlier in the day. Cable, meanwhile, managed to hold off the advance of the dollar yesterday, but has started the day on the back foot today, dropping to 127.65 this morning. Have a great weekend. I'll see you on Monday.